Okay. All right. Let's have a real conversation. Let's put this up. This is going to be our office here today for this heart to heart that I want to have with you guys. Bring this down. Look at that. All right. So we're going to talk about 5 things in psychology which I think are very important as a new trader, because a lot of times when you're new, you're going to win, the first week, the first month. We have our own, someone who works with us in the office. He started winning and, he's still doing good, but a point comes where your overconfidence in those, I would say, like accidental wins, it gets so high you think that you're never going to lose. So the first thing that we're going to talk about is basically it's going to be FOMO, fear of missing out. It basically happens when you're looking at a chart and price is moving, let's say gold, right? Let's say gold, you want to look for a buy opportunity, but then you see that candles are just printing. They're just moving bullish one after the other. And it's like it's moving with so much ferocity and with so much volume that the chart kind of starts to go up, right? Like when there's so much volume, the chart just keeps on moving up and up. So you look at that and then you're like, okay, you know what? Should I enter a trade at this point, or should I just wait for some sort of retracement? Now, that thinking, when you're looking at the chart, you see price moving, that thinking, when you start to think, okay, man, I should enter now, that's fear of missing out. Because you have to respect yourself as a trader to say, okay, you know what? If I have missed this move, where could I have had an entry? And 99% of the chance is that you're going to say, okay, my entry should have been right here at the bottom where the move started, right? Not when the move is already running and you want to take a buy. And if you do win, you're going to think this is going to happen over and over again. But in the same way, you're going to be basically axing yourself in the foot, because most times there's going to be some sort of retracement. So whenever you feel like you're missing out on an opportunity, whether it's pound yen, pound USD, gold, and whether it's price just pumping bullish or just dropping bearish, just wait. Just wait for some sort of retracement. That's all what you got to do. Because, I understand when you've been losing and you see price moving, you want to enter in that trade and make that quick win, make that quick buck. Man, like making quick bucks will never work. Like a lot of you watching right now, you've been through this so many times, So whenever there's fear of missing out, just say, okay, you know what? I'm going to calm down. I respect myself as a trader. I've missed the move. That's fine. I'm going to wait for the retracement, and then we're going to go from there. Okay, fear of missing out. Next, what I'm going to talk about is greed when you're over trading to cover losses. Right, Caesar? You got that too? Yes. Right? So Caesar's there. So a lot of times what happens is that, let's say, you think price will go bullish. Okay, you're right, perfect, awesome. Price is going to go up. You take a buy. Now you've executed a buy order and price starts to retrace. It comes closer to your stop loss. What happens is you're like, okay, you know what? My belief that price will go up is so high. What I'm going to do is I'm going to extend my stop loss, and then I'm going to add another buy, so that now I have 2 buys running, and if price goes up, I'm going to make more money. Right? Then price retraces a little bit more, and then you add another buy at the retracement. Price retraces more, you add another buy at the retracement. How many times have you guys done this? Like I've done this too a lot of times. Way more times than I can even imagine. Whenever price retraces, I would take a buy, I would extend my stop loss, I'd extend it again. The trade which I would have started off based off of the 4-hour time frame or the 1-hour time frame, now in my head I'm thinking, fuck, this is probably now going to be a swing trade. It's based off of the daily, but the main thing is now you've added so many positions to this one trade that your risk is not based on the daily now. Now you have added risk which you never meant to add, only because you thought price was going to go up and you did not manage risk. You kept adding positions. You got to stop doing that. The one thing is that I see kids when they come to trading is they always think about, oh, you know what, I'm going to have a mental stop loss. because whenever price is going to come to my area where I'm going to close, I'm going to have a mental stop loss. And your mentality is not mature enough. It's not there for you to really take responsibility for that price to close your trade. You don't. Like a lot of times you don't. You just extend the stop loss. Why the fuck are you extending it? The more times you're going to extend it, there's a much higher probability you're going to lose. So whenever price goes against you, whether you're in a buy or a sell, and you want to add a position, just stop. Don't add positions. Let it hit the stop loss. Let it hit the stop loss, and then go get some education to see how you can give your trade a second chance, because a lot of times whenever you close the trade, you find out that motherfucker went in your favor after that, right? So now you got to see that, okay, how can I give my trade a second chance so that I could have been in this trade, right? Third thing we're going to talk about is sticking to your trading plan. Now, I get around 50, 60 trading plans sent to me every 2-3 days, right? And every trade, let me tell you, a lot of you guys do these massive calculations, and you guys have a solid trading plan. It's so amazing. I look at the trading plan and I'm like, man, this guy cannot fail. Even if the world explodes or falls down, this guy's not going to fail, because every trading plan is a solid trading plan for you to make money over time. But a lot of time what happens is that you're going to follow your trading plan for, let's say, a day, the second day, the third day, then the fourth day you're going to take a loss, and then you'll say, okay, no problem, and then you're going to break a rule, and that rule in your trading plan is going to be okay. Now you got to focus on 1 or 2 trades. What you're going to do is you're going to add another trade. Now that loss is going to get bigger. Now look at your progress. It's coming back. Now you take another trade to cover that loss, to bring you to break even. Higher probability is you're going to lose that trade. Now coming back again. What's going on? You know, because you have a solid trading plan. If one day doesn't work, that's totally fucking fine. You know, take the next day off, come back the day after, and study your trade. Study your loss. Like a lot of times you guys will follow your trading plan. You will follow 1 or 2 trades a day, and that way you will revise your trades. You're going to go over your trades. But then a day is going to come by where you're going to take 8 trades, 9 trades, 10 trades. Who the fuck has so much time to go over 10 trades? Who's going to do? You're not going to do that. I'm not going to do that, right? So that's why I stick to 1 or 2 trades. You know, so the guys you see who do win consistently, they take 1 or 2 trades a day. You know, and over time when they continue to make money, most of you guys say, oh, these guys are scam. These guys are fraudsters, because they're disciplined, because they're consistent, they're following a trading plan. Doesn't make them, you know, bad, doesn't make them scammers or fraudsters. This means they're committed to their craft and they're committed to their trading plan. You know, so all you losers out there who say, oh, these guys are this and this and that, when you can't even follow your own goddamn trading plan, it doesn't make any sense to talk bad about anyone else. Okay, fourth thing to talk about is not taking profits. This is very important, because a lot of us, we take a trade and price goes in our favor. Okay, awesome, price went in our favor. We have this hypothetical zone where we think price is going to go, and as price is moving up, it's reaching that zone, and you're like, okay, I should take profits, I shouldn't take profits, and then price goes up again, and then boom, starts to retrace all the way down. You know, now, most times, what happens is sometimes your target is going to get hit, right? But a lot of times, your target is not going to get hit, because maybe your target is above some resistance. Maybe your target is some fucking number in your head that you think is going to get there. No. Since 2016, I've been an advocate of 10 to 15 to 20 pips. That's all what you need. If you're looking at a pair like gold, really volatile, 15, 20 pips is easy. You're looking at something at pound yen, 15, 20 pips is easy. You're looking at something like, you know, USD yen or Euro yen, 10, 15 pips is easy. You know, that's all what you got to do, is just compound these pips. You know, don't look for home runs. You want to look for a fucking home run? Close 90% of your position, secure profits, and let the tiny position go wherever it wants to go, because you got to build confidence first. Right? You got to build confidence. The more confidence you're going to have in holding positions, the better you're going to be at holding the full position. Because a lot of times you don't secure profits, you make no money, you get stopped out at break even, or you get that supposedly winning trade in a loss because you did not secure. I always secure. Sometimes I secure early, but that's fine. That's totally fine, because at least I'm putting money from the market in my trading account, and then I'm withdrawing that money from the trading account. Like a lot of you guys can't even put your money from the market to a trading account because you think it's going to go to some some level in your mind, it just doesn't make any sense. So this brings me to my fifth psychological point. And by the way, this isn't scripted. This is just straight one form recording, which we're doing now. So the next is going to be the last one, not utilizing risk management. What do we mean by not utilizing risk management? Number one, of course, you got to use stop loss, right? All you guys here in the chat, what's number two? One, if you got to use stop loss, what's number two? What is it? You use stop loss, then what? You got to make sure that you lose less than what you planned on losing. Like a lot of us, what we do is we take a trade, we have a stop loss, and we're like, okay, you know what? We're going to lose 2%. Fine, you lose 2%. You take the next trade, you risk 2%, you lose 2%. Now you're down 4%, right? Now, what do people do when they're trying to manage risk is that if they're risking 2%, they're going to figure out, how can I lose less than 2% if I know this trade will be a losing trade? How are you going to do that? That's the trick. Because you can lose 2% all fucking day, you know, but how can you lose less than 2%? How can you lose 1.5% knowing that this was a bad trade to begin with? That's the secret. And you only get that by reading candles, by looking at candle structure, market structure, because that's where you really got to look at risk management. That's what's going to take you out of a break-even stage. Like a lot of traders, poor traders, man, you guys get stuck in break-even stage for months and years. How are you going to get out of it? By looking at your losses to see how can I reduce my loss. You know, because your winners are the same, your losses are the same, hence you're at break-even. You can't increase your winners, we all know that, but you can decrease your losers. The winners are not in your control, the losers are in your control. Whenever price goes to your stop loss, look at market structure. Like a lot of you guys already know this. Look at market structure and see, how can I reduce risk? I took this loss. How could I have reduced risk on this trade? These are very important. You know, all these 5 things we went over for this psychology thing that we had to do now, man, these are very important. And this goes into your life as well. How dedicated, disciplined, committed you are to your own lifestyle, because that's just going to pour into trading. If your trading is a mess, this just shows that your life is a fucking mess. You know, if your life is structured, it's well balanced, then trading automatically will be into that structured, well balanced life, and over time it's going to get better for you. You know, so I wish you guys the best of luck. Hopefully you guys apply these techniques. Very important, very important. I took my time out of my busy fucking schedule just to do this for you guys, okay? So take care. I wish you all the best.